Right, so welcome back to video 2. We're going to talk about why do we invest. So recapping on last week, we spoke about if a company has 100 shares outstanding, this company being Mangwap LLC, trades for $1 a share. If I had to sell all 100 shares on the stock exchange for $1 on average, my company's worth $100. Simple. Moving on, why do we invest? There's 3 key themes: to preserve wealth, possibly earn some fixed income, or grow our investment. Okay, and you can have a combination of the 3. You can have one single approach just for your type of investment style. So what most people do is they get involved in the market. They go find these high tech names, high risk stocks, and they go invest their money. And what you're doing is you're hoping, all right, I invest $1 now, this business reinvests all its earnings, it builds itself into this giant company, and the value increases, and eventually my $1 becomes $10. But it can go south just as fast. These companies might not get off the ground. There's some silly statistic like 80% of startups don't even succeed. So a startup might go public, and before you know it, it's trading at 10 cents. Because it just couldn't get off the ground, it couldn't execute on business procedures. So there's a lot of risk involved, and a lot of people getting stuck into the market at our age, they get into company A, B, and C, which is extremely high risk. And you ask them, how was your investment experience? I got stuck into the market and I lost half my money. Well, if you put your whole portfolio into high risk, you're going to lose a lot of money if you don't do some good due diligence. So on the other side of that, we have our lower risk companies, which we call blue chip companies, which are our Apples, our Microsofts, our Googles. And despite the technological boom, these companies sort of have lower growth. So their share price isn't going to increase because Apple all of a sudden isn't going to just 10 times its value. It's already a giant. It's worth $2 trillion. So you might see a small increase in Apple's share price, over time, 10, 20%. So you might ask, all right, so what? I buy Apple now. How do I make money? The share price is not going to change. I'm going to put my money there and I'm going to get $1 back next year. Why should I invest? What these companies do, these blue chip companies, and a lot of other profitable companies, because they're sitting on so much money and they're not reinvesting as much. So what do these companies do? They distribute this cash to their shareholders through 2 key ways. We've got distribution through dividends and distribution through buybacks. So coming back to Chevron's trading at $156 a share. So what does this mean? That means at the end of every year, Chevron pays out $5.68 to its shareholders for 1 share. So for me, I own 1 Chevron stock, I'm going to get $5.68 every year. If I own 10 shares, I'm going to get $56.80. So the next thing people don't understand is, okay, why would I buy a stock at $156 just to get $5? You're not trading in your stock for $5. You can sell that stock at the end of the year, as well as get your dividend, and you've made $161, and that's a 3.63% return on your investment. So that's the key thing, is that you're getting, regardless of the stock price could trade down to 100, you're getting $5.68 per share at the end of the year. And this could be semi-annually, it could be quarterly, it could be yearly, whatever the company decides to distribute this money, that's how much you're going to get. Moving on, we've got corporate buybacks. So for tax purposes or whatever other reason, people may not like dividends. So what do businesses do? The new preferred way of returning cash to shareholders is through buybacks. And what buybacks is, and I've got I can go in depth in this if you guys want, but I'm not going to today. Corporate buybacks simply mean, all right, Mangwap LLC decided we're going to start doing some buybacks. All right, it's a form of capital appreciation. We want to increase the price of my stock and therefore increase the value of the company or the shares on the market. So what Mangwap says is, all right, here we are, company's done great, phenomenal, thanks for investing with us, and we're going to start buying back our own share. And if we increase the demand for that share, we begin to increase the price. So if I hold all 100 shares at $1 and we begin to buy back shares, increasing demand, which increases price, I now have increased value in my position. So these are 2 key ways in which the bigger companies look at redistributing wealth to their shareholders. And then in the next video we'll talk about demand mechanics of price, which is super simple, is understanding how price moves, as well as candlestick charts. These charts are quite straightforward. It's how we watch price movements of a certain stock or index.